whether I'm in retirement or whether I'm planning for retirement, the sooner that I get a handle on how much income I'm going to need, then I can do my planning and work towards that plan.
And we are addressing how to be retire ready here on Financial Focus with John Kuykendall, founder and CEO of GulfCoast Financial Services. GulfCoast Financial, of course, has been named best of the best in financial services by the readers of the Lake City Reporter, 10 straight years and running in financial services. And each week, more and more listeners, proactive savers and investors figure out why, tuning into this program and then coming in for a visit with John Kuykendall, founder and CEO, and the team from GulfCoast Financial Services. Now, John, we've been talking about this 31-page guide, Retire Ready. Last week, we got through the 6 top risks for retirement. And kind of just to recap that, right, is that running out of money, living too long, the national debt and the impact that could have on taxation, Social Security, Medicare, unplanned healthcare expenses, inflation, and then number 6, everything else, which we are certainly seeing a lot of everything else right now. Normally we keep these pretty green, but we have seen some market volatility, geopolitical unrest here recently. And we know that that is affecting the market and the psyche of retirees.
Yeah, that's right, Peter. It's a very volatile time because of the legislative changes that are being made. And we're seeing that investors, are beginning to panic. We've had an unusually long run for this market, and now we're having a little bit of a correction. But, as I always said, the forest doesn't grow unless we get rid of the weeds. And so every once in a while we have to burn the forest so that the weeds can come, so that the weeds are gone and the trees can grow. They get all the nutrients. And so I think this will be short-lived. I mean, it's painful to watch it. It's painful to see the market at red every day, but it's a necessary thing, Peter.
You also help your clients maintain the proper mental approach by having that financially focused written retirement plan. And there are steps to that process and putting that together, John, to help people keep their goal in mind and even head during market volatility and know that their plan is working regardless of market direction.
That's right, Peter. And that plan we've said over and over again is very important for retirement. And one of the first steps that we need to do is take inventory of our income needs for retirement. I don't know how we can plan to go in retirement if we don't know how much money I'm going to need. Whether I'm in retirement or whether I'm planning for retirement, the sooner that I get a handle on how much income I'm going to need, then I can do my planning and work towards that plan.
So taking inventory of your income needs for retirement, clearly identifying your retirement and financial goals, create, test, execute the plan, monitor and adjust as necessary. I mean, it sounds simple, but not everybody has done even one of those, not to mention all 4 of those critical steps in the financial planning process.
Well, that's right, Peter. I mean, it's procrastination. A lot of people think I have a lot of time till retirement. I don't really need to get started. And we need to create and execute the plan. We can't procrastinate. We can't put it off. We need to get that income plan and that retirement goal so that we know where we're headed. And we need to monitor it. This is a prime example now, as we're talking about the market, of why we need to monitor our plan. We've had a great market. We've all been very aggressive. We've been in large cap growth. We've been in tech stocks. It's reminiscent of 2000, 2008. Now we need to be more conservative. And if we're monitoring that 401k, now is a good time to take a look at it and make sure that we have the risk tolerance that we need for it.
John, some math that is done in the example, and this may seem kind of daunting to folks, but what's $1 million worth in retirement? And you followed the 4% rule here. So following this kind of accepted guideline for cash flow of we should be able to take 4%. That means $1 million generates about $40,000 a year of income for us in retirement. Oh, but
Right,
wait, most people have that $1 million in a tax deferred account. So
right.
now if we factor in a 15% tax rate, that's $2,800 a month that $1 million is going to give us for spendable income in retirement. And I think that might be a scary stat for a lot of people.
Well, Peter, I think it is. I mean, I've always heard that when I got to $1 million, I could live a comfortable lifestyle. And when we look at that, that's less than $36,000 a year that I'm going to be able to live on, plus my Social Security, which is probably going to be another 20 or 30. So, I'm going to have maybe 60,000 to live, and I'm going to retire in 10 years. Things are going to be twice what they are today.
Mm-hmm.
I
Because that
mean,
compound interest, that rule of 72 works on inflation also, right?
it works on inflation. That's right. Prices will double based upon the rate of inflation. So, that $12 Happy Meal at McDonald's is going to be $24. So, my money doesn't go as far. I don't have the income that I need. And that's why we need to work up the income plan, Peter, because if I'm pulling out 4%, I've got to make more than 4% so my portfolio grows and my money will last longer, and I can't live on 4%. But can I pull out 6, 7? No. I have to figure out a way to get the income predictable, sustainable, and I know that it's going to last for my retirement. That's why we like the three-leg approach. I've got Social Security, I've got liquid assets, I've got pensions and Social Security, and I've got my growth bucket. And my growth bucket is going to grow when the market's up, and it's going to stay flat when the market's down or go down a little. But I'm not relying on it, so I'm not pulling out of it. And as we know now, the sequence return is our money will go faster if I'm pulling in a down market. I can't live forever on that scenario. So, it's a catch-22. People have to make an idea of how am I going to take that 401k and turn it into predictable, sustainable income that's going to last me for a lifetime.
Well, I like the math that you do in the guide here, the examples that you give, and I am a little bit of a math geek, but you rework this scenario several different ways, right? You give the equation for how long will my nest egg last?
Right.
In one scenario. And then in another scenario, well, how much will you need in retirement? And then another scenario, how much should your nest egg be? So a lot of different ways to kind of work that equation. But then we get into the goal of investing. Right. And during our working career, the goal of investing is growth, growth, growth. But in the guide here on retiring ready, it states the number one goal in investing in retirement, protect investments above all else.
Yeah, you got to diversify. We have to make sure that our portfolio is diversified so that we're just not all in tech stocks. We're diversified among bonds, and we're diversified among different levels of stocks, so that I've got that, I got value, I got growth, but I don't all have aggressive stocks. We have to be diversified. And the number two rule, which I think is very important right now, is I have to rebalance. We've had this tremendous run up. And so the stocks and the mutual funds and the ETFs that you bought have all gained in value over the years. And now you're out of weight and where you should be. And if you looked at your portfolio, you're probably more aggressive than you wanted to be. You're probably more at risk to the market downturns, which is making you nervous and causing you concern. And that's the reason that we need to rebalance and get our risk back to where it should be in our portfolios, Peter.
Warren Buffett has his two rules of investing, right? Number one, don't lose money. Number two, refer to rule number one. And you've got another quote from him. I hadn't heard this one before, but I like it in the guide. We don't have to be smarter than the rest. We have to be more disciplined than the rest. And that's, again, what having a written plan, that financially focused written retirement plan is all about, right, John?
That's right, Peter. It's giving you the rules and the roadmap that you can follow so that you can have the retirement that you need. And we need to be disciplined and make sure that we are doing everything we can. It's our money, people, and we have to make sure that we're making it work for us. Because in retirement, the only thing you got going for you is the money that's working for you. It's now, you saved it. It's the thing that's creating the income, creating the growth. We don't have a salary anymore. We're paying ourselves. So we need to be ready for that. And certainly, Peter, we can't take the statements and put them in the drawer and forget about them and say that, it'll come back. I don't need to worry about it because we're going to be living on it.
Yeah. Again, this guide, ladies and gentlemen, Retire Ready. It's a fantastic guide. A lot of information packed into 31 pages. A report that you can get. Just reach out to John Kuykendall and the team from Gulf Coast Financial Services. Give him a call or shoot him an email or visit the website gulfcoastfinancial.net or 386-755-9018. John, you've got a little chart in here, how to make $1 million. And you've got different rates of return, right? All the way from 3, 6, 9, 12% rate of return. And then over the course of 5, 10, 15, or if you've got 20 years available, right?
Right.
And if we want to make $1 million in 5 years, if we're earning 6%, we've got to be only investing $14,261 a month. That's it. But like time is on our side, right? Because if we start early and stretch this out, if we have 20 years, then we only need to be investing about $2,100 a month. Much more realistically doable, I think. And that speaks to the time value of money and investing, right?
That's right, Peter. And if you think about it, when you're young and you're just getting started, if you're putting $50 or $100 a month up, you're creating a retirement that's going to be there for you, and you won't need this 12,000 or the 14,000. You'll be able to accomplish what you need. And I don't say there are very few people that can put $14,000 a month up. You know,
Warren Buffett probably can.
well, yeah, but they're already millionaires.
Right. Yeah. The people who could already have
Yeah.
it. Exactly.
We're,
Yep.
we're just trying to get caught up.
A lot of us are, unfortunately. And John, what will help is following these 4 golden rules
Mhm.
of risk managed investing. Can you go through those 4 rules?
Diversify, rebalance, we've talked about. The third one is dollar cost average. What that means is I'm buying stocks and mutual funds at different prices. So what I'm doing is I'm averaging my cost. In a down market, we're going to be averaging down, but all the stocks in the portfolio will be adjusted. In an up market, I'm going to be buying different shares at a higher price than what I probably have in my portfolio, but that's okay because I'm going to be dollar cost averaging. I'm not putting all of my money in at one time. I'm not moving it all into one stock because then I buy that. That's what my basis is. I have no way to change it. By dollar cost averaging, I can bring my basis down in a down market for that stock so that really I'm buying it at a discount. And when the market goes back up, I'm going to make more money. And number 4, Peter, is the one we talk about all the time. Have a strategy. Know what your risk tolerance is. Your risk tolerance, I believe, is what I'm invested in. And if it goes down, can I sleep at night? And if I can't sleep, then I'm too risky. If I can sleep, I'm perfectly balanced. And so, with my portfolio, even though it's lost money in this market, I don't have any trouble sleeping because I know I'm diversified. I know it's going to come back. Over time, I'll make it back up. And so I can live that way. And then also defensive funds, fixed income. Make sure that we've got the right amount of fixed income funds, bonds, so in our portfolio, so that we can have more diversity and all the other rules fall into place. But you got to have a strategy, Peter, and you got to follow that strategy. And every strategy is unique for that individual. Some people have to be more aggressive because they need more money. Some people don't need that much money to live on. I've got clients that can live on 50,000 a year. I got clients that need 150,000 to live on.
Mhm.
So it just depends on their own lifestyle.
having that financially focused written retirement plan that you and your team put together there at Gulf Coast Financial Services, John, that is that strategy, right? That's rule number 4. That is having the
Yeah.
strategy. Isn't that going to allow us to remain much more disciplined in our approach to dollar cost averaging or creating income? I mean, you mentioned,
Yeah.
yeah, like when prices go up, or prices go down, rather, dollar cost averaging helps us to buy more at a cheaper price. But I feel like without that strategy, without that plan, there's a lot of people that when they see those prices go down, even though that's like one of our best opportunities for dollar cost averaging, they sort of panic. They don't have the plan. They don't have the financial focus. They don't have that written plan. And so they say, oh, the market's down. I'm going to quit investing while it's down. And they lose out on that opportunity.
Well, Peter, it always brings me back to mind the individual that I met with one time, and he told me that he had invested all of his 401k in the money market account and was earning about 1% interest. And I said, well, that's not a bad strategy. If we went down, a couple of months ago. He said, oh no, I did it 10 years ago,
Mm.
and he never moved his money. So, during that period of time, he made very little returns. He didn't lose any money, but he didn't make any in a market that was going up, 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 up. So we have to be disciplined. We have to have a plan. We have to follow the plan and understand it. Now, with a financially focused income plan, we take a holistic approach. So we want to look at taxes, Social Security, income planning is a big part of that. We want to look at Medicare. We want to look at Social Security. We want to look at all of it so that we know exactly how it's all going to fit. We're going to give you a time that you're going to file for Social Security. We're going to give you a time you're going to file for Medicare. And we're going to help you through all that by making sure that we help hold your hand while you're filing for all those. Many, many times people get confused and they do the wrong thing.
Mm.
And so we want to make sure it's not easy. As I've always said, it ain't for wimps. Getting old isn't for wimps. It's not easy. It's complicated. And, while our minds are still sharp, unfortunately, dealing with the government ain't easy.
Yeah.
So,
Ever. But
ever.
quitting is for winners, but retirement's not for wimps. That's why
That's,
we create that financially focused written retirement income
yeah,
plan. And whether we are already retired or 10 to 15 years out from retirement, that plan is still going to allow us to understand the steps to get from here to there and stick to the plan with discipline, John.
that's right. We can work that plan up for anybody, Peter, because the things we've talked about here, the amount of money that I think I'm going to need in retirement, we can index that for inflation so that 20 years from now, at a 3% inflation rate, we can tell you how much money you're going to need. And we can show you how we're going to get there, how we're going to save for it, and how much money we're going to have to defer, how we're going to make it back up, how we're going to diversify, how we're going to have that growth bucket so that we can make the most during the market and lose as little as possible, but keep us growing. And so those are all things that income plan will work no matter what age you are. And whether you're in retirement or just starting out for work, that plan will work for everybody.
Well, again, if you would like to get your plan put together, have in your hand a written, financially focused retirement income plan, or if you'd like this guide on how to retire ready, not just be ready for retirement, but actually retire ready. Pick up the phone, give John Kuykendall, the team from Gulf Coast Financial Services, a call, 386 755 9018, 386 755 9018. The good thing about that financially focused written retirement plan, John, is that you create a tailored income plan and investment plan with an appropriate level of risk for each individual investor.
That's right, Peter. We want to make sure that everybody is comfortable with what they're doing and that they have the right plan in place. As I said, there's no one plan for everybody. We need to know what our number is and we need to work for that number. And we can do that. We need to be disciplined in the approach. And that plan is a living, breathing document that needs to be updated every time there's a change. I've got another kid, I got a divorce, I bought a house. All those things need to be included in the plan so that we can plan properly, Peter, and have a strategy that works. Also, legacy planning. We want to make sure that we have the documents in place that if something happens, we know how the assets are going to be passed.
Monitoring, rebalancing, refreshing the plan. The goals change as time evolves. We move from accumulation to preservation to income and then to legacy. And John, that financially focused plan looks at what's next and helps people plan appropriately. We always appreciate your time. The guide, Retire Ready, is a great guide, but even better, having all of this information personalized, customized in that written plan for us. So again, ladies and gentlemen, if you would like to get the guide, Retire Ready, or if you would like the financially focused written plan so that you can be ready for retirement, pick up the phone, give a call, 386-755-9018, 386-755-9018. And John, we are seeing volatility in the market. It's nothing new. We will continue to see volatility. The plan is what's going to allow you to react correctly and appropriately with conditions that can change daily.
That's right, Peter. And with that plan, you will be able to sleep at night, know that I know where I'm going, and I can get to where my road ends when the time is over. And I've lived the best retirement I can live because I planned, I knew where I was going.
Again, if you'd like that financially focused written plan, pick up the phone, give GulfCoast Financial Services a call, 386-755-9018. John, always appreciate the time and the information you share here on Financial Focus.
Thank you, Peter. Great to be here. See you next week.
Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.